Fund Supermart, your online gateway to unit trusts.
Hi AJ, can you tell us briefly about QS Investors and what is their core competency?
QS Investors are an innovative investment solutions house based out in New York and Boston. They create very clever, smart, behavioral finance orientated investment products. Take, for example, managed volatility. Take, for example, global equity, diversification-based strategies, as well as multi-asset strategies. So they cover a number of different fields, but they specialize in creating more advanced, innovative solutions for their client base to solve the problems of today.
Why is a managed volatility strategy relevant for investing in today's environment?
Today, investors want more than just good returns. What they also want is lower drawdowns. What are drawdowns? Drawdowns are when markets are falling. It's the experience of that negative return. Now, that's a natural phenomenon. But the question is, can portfolios be a bit more defensive? Can they be a bit more robust? So when markets fall, they fall less. We've created an investment solution that falls less when markets fall over market cycles. That's what we want to do. So think about managed volatility as a solution in terms of reducing volatility over long periods of time, but for that level of reduced volatility, still achieving attractive total returns, as well as, and this is an attractive additional benefit for our clients, an income that pays more than the market.
How has the fund performed in the face of heightened market volatility in recent times?
So, a great question. Obviously, markets have been in turmoil. Even over the last 18 months, markets have been swinging around aggressively. There's often, in many ways, enthusiasm that's coming in investment markets due to, let's say, central bank policy decisions or hope that economic growth is going to rise, and markets rise. And then we hear some negative news in the market, and these things very much collapse. We've seen a lot of volatility. And investors, to a certain extent, are a bit fearful of that kind of velocity of change and also volatility. So we've created a product which has actually had very good defensive qualities. Over the last 12 months, our investment fund, the Managed Volatility series, is actually outperformed by over 5%.
How does this strategy address investors' needs?
So, what do we look at as investors' needs? I think, if you think about after the financial crisis, a lot of investors stopped wanting kind of what we would call Me Too products. Products that most investment houses, investment companies sell, which is trying to beat the index, and that was really their key objective. Investors, going back to my first answer, want more than that. They want to have a lower drawdown. They want to suffer less pain when the markets are coming down. They also, in an environment of low interest rates, low income from the banks, low interest from the banks, low income from fixed income securities, they want additional income somewhere else. And guess what? The equity markets can provide that. So the equity markets, for example, in Europe, can provide a yield of 3.6%. And with a fund like ours, you can actually get about 4.5%. So investors today want more income, they want less volatility, and they still want an attractive total return. And that's the kind of concept that we've delivered and given to our clients.
Thank you, AJ.